Hey guys, Jason here for TheChartGuys, taking a look at Tesla. Nice strong day today, despite the market weakness and some weakness we saw on some names in the tech sector. Things are holding together pretty well. We have a daily inside bar with a green candlestick, which is good. And those daily inside bars are nice because they set up some ranges for us that we can utilize tomorrow for potential action should we open inside the range. And this, I want to open right inside the range, right around 250 would be absolutely perfect, because that gives us the opportunity to watch the bulls or bears in action, see the fight take place, get an idea who's in control of the day, and when they smash through one of these levels, that is really going to be the key indicator for us to start scouting positions, waiting for a slight pullbacks and counter trends, and getting into that anticipation of continued action in direction of the break. Doesn't always work, of course, because if it did, everyone would be doing it all of the time, but we utilize these probabilities and these odds and looking for these scenarios and trying to time our entries and our exits just perfectly. And if you want to learn more about this, I'm going to do a shameless plug. We've got a course called Entries and Exits on TheChartGuys.com. This is pretty much what we talk about. It's finding these key opportunities and using different methods and methodologies to do that. But anyway, here's our inside bar. Our range on today's action is a high of 253.53, a low of 247.93. And you can see that because this fits inside this bar, that's why it's called an inside bar, but generally just it represents that there's a tightening range. And if we go to the hourly time frame, you can really see that. And that's because we are setting up a potential for an hourly EQ. So here's our low, our high, higher low, lower high. Potentially, if we open here tomorrow, we flush down. Maybe we don't break that inside bar. Maybe we just continue to tighten. And these hourly EQs are absolutely wonderful for a couple reasons. One, daily time frame, RSI is still overbought. If we do that again tomorrow, gives that day gives the daily RSI a chance to cool off. If we go to the hourly time frame, this is exactly what we saw. We were overbought. We see that consolidation allowing RSI to cool off and things to get back into a more realistic position for continued upside movement. Not necessarily what's going to happen. The inside bar break may give us an indication of that, but we're going to be watching those levels and seeing if we get an hourly EQ established on Tesla. So if that happens, and we break to the bull side, what were our resistances yesterday? Well, 258.35 is going to be a key one, pretty much the one to watch should we break out, and that would actually be a pretty nice move on the daily time frame, so not a bad profit target. Should we break bear, no real support on the daily time frame until the 4-hour support established right over here in after hours or pre-market at 235.80. So big potential short here. But be very cautious because the daily trend is very much to the upside, and it can be often dangerous to go against the trend. But nice EQ setting up on the hourly. Nice daily consolidation underway, and things are looking okay for the bulls. No big red flags quite yet. In fact, we're still getting higher highs. Sorry, we're still getting higher lows on the hourly. That's the first signal that things are going to change, is when we lose that, which of course will mean that that hourly EQ has broken bear. Anyway, that's it for today. If you want to learn more, TheChartGuys.com. Go to Google. Lots of books available. Tons of free resources out there. Check out our YouTube. Check out other people's YouTube. I don't care where you learn it. Just check it out. Technical analysis. It will literally change your life. Hey guys, Jason here for TheChartGuys, checking out Apple. Not a lot of strength following yesterday's move, and I think we talked about the fact that we had this upper wick as a sign of concern. We should not have that sort of upper wick if we've got a lot of movement and a lot of strength to the upside inside this channel. Profit taking on any candlestick is a sign of bearish dominance, and it's expected more at the top where we get this sort of action, or here, or here, or here. That's where we expect those bears to show a little bit of strength and turn that trend around. For it to happen at the mid-range of our trend is a little bit of a concern. And then ultimately today, we ended with a complete indecision candlestick with a nice doji. And we look at the hourly time frame, we can see we actually bounced right into that area of support again with a low around $203.50, currently shaping up a potential hourly EQ. So if we follow the trend, this should indeed break bull, and we should see a continuation of the upside. But these EQs give us these nice levels that we can use to find our short entries. So if we get an hourly EQ, and let's just say this develops similar to this, where we come and we set up this nice tightening range. If we break bear on an hourly EQ and we also break the trend, that is more significant than just breaking an EQ, because if we have a tightening range pattern that gives us a direction, that gives us sentiment, and it smashes through a trend that has been holding for a couple of weeks, that is just going to give us more odds and more probability that there's going to be a more significant move to the downside. So that's what I'm watching right now on the hourly time frame. All I know is we're in an uptrend. We would like to see this trend continue because it gives us good profit opportunities, but we also need to be open to the idea that this hourly potential EQ is going to break bear. Current range on that is 2003.50 cents, and a high 200. Said 2003. It's 203.50 cents and 204.93 as our resistance. So watching those two levels very, very carefully. If we break the high of this pattern, $204.93. Next resistance is going to be hourly resist at 206.11, and then all the way back up to our overall daily trend line resistance. Should we break bear, 201.97, 201.52, then we jump to the daily time frame to look for support down here at the low, 198.41. That's it for today. Thank you so much for watching. Hey guys, Jason from TheChartGuys here, taking a look at Amazon. Another wild, choppy day of indecision, and these indecision days are starting to, well, they're starting to resemble a little bit of a bull flag. And the sense that I'm getting here is that the bulls are not done, but the bears are not showing a lot of strength here either. So we're getting a big run up. We're getting the big volatility, these candlesticks, and 1, 2, 3 days of indecision. There's a slight bias here, I think, before the bears, but bulls definitely have a lot of territory that they have set up with basis of support for. So what we need to see for this to break is going to be a loss of 2001.22 cents. If the market has a significantly bad day tomorrow, I could see that happening. And we do have another support on the daily time frame right around here, a double bottom in the area of 1995.40. So if we go to the hourly time frame, it makes a little bit more sense on this time frame. Here we can see our higher highs, higher lows, and we're getting 2026.32 as our current high, and we are getting that sort of double bottom support down here at 2001.55 and 2001.22 cents. And then here's that other double bottom area where we've got this low and then multiple hits on that area of level. So a couple of zones of support here that the bulls can fall back on, and we've really got this establishing this tightening range for us. In today's action, however, it leans a little bit more bearish. Here's our open, strong open, where we set the high of 2026.32, and then a sell-off and a dump to the low in that area of support, 2001. Finally, we get the bulls taking that V-shaped recovery, giving it all back, and then a slow climb with a sell-off towards the end of the day. What does this show us overall? Is this consistent downtrend and attack by the bears, pushing the price down towards those zones of support. So if the bulls don't show up tomorrow, the overall market pulls us down. We lose 2001, we lose 1995. What does that do for us on the daily time frame? Well, no real support here until on the daily. I would say probably right around here, because there's a bear attack after this doji. So the low of 1906, quite a ways away. Maybe some more support on the 4-hour time frames, but not very much. We can see that our next low is going to be after hours, so not as reliable, at 1938. So that's where our next support is. So if bulls are going to pull this through, they need to get over 2026. Just today's high of day, and then we got resistance in the area of 2033.19 cents, with the high of 2035.80 as the ultimate goal. Those bulls need to bash their way through. So we'll see what the market does for us tomorrow. Nice tight range established here with multiple areas of support for the bulls. So clear levels that you can take a short position with should they break. Sorry about that, and move to the downside. So all eyes on the bulls at those areas of support, and we'll see what they can do tomorrow. That's it for Amazon today. Thanks for listening.